afternoon, everyone, and welcome to Stock Market Today. Ali Korm and Justin Nielsen here with a breakdown of the action in today's session, where we saw a big milestone from a big tech stock and some other interesting movers, Justin.
Yeah, so we'll definitely take a look at Tesla and its big milestone, as well as Albemarle, which is in the lithium mining, and also Celsius, beverage maker.
Let's do it. First, checking in on the major indexes. Here is the Nasdaq gaining some 0.9% today, and the Russell 2000 did as well. We also had the S&P 500 up about 0.5% and the Dow up 0.2%. So the Nasdaq isn't quite at new highs like the S&P 500 and Dow, but it's sure continuing its way towards that level.
It's on its way. And, again, we had that distribution day, our first distribution day on Friday last week. That was the first distribution day on the NASDAQ since you had that distribution cluster at the end of September. But, one distribution day, that's not going to knock this rally out of contention. And it was actually due for a pause, given that we had 5 strong up days in a row. And, we were getting a little bit extended. So it's nice that you have a pause. And in fact, what happens a lot of times is you can get some more setups as handles get tacked onto your cups and some flat bases form and things like that. Tech is certainly one of the areas of strength, but it really is broad. The areas that were the strongest, consumer discretionary today, energy, materials. So it's not just tech funded, a tech-funded rally. This is something that is a little bit broader, and that's why you're seeing the S&P 500 at new highs and the Dow Jones Industrial Average. It made a closing high on Friday, getting back above its August 16th level. So all of the indexes, this is what we like to see, is when they're all kind of rowing in the same direction, as opposed to what we were seeing earlier this year, where the NASDAQ was going flat for a while, the S&P 500 was making progress, and so on.
Well, does it seem like, okay, it's all systems go? Should we start getting concerned now that things are so good?
Well, that's always the trick, right? When you start saying I'm making too much money, and you get a little cocky. But at this point, I think a lot of the things are still working, and as long as they are, now you could be taking some profits into strength.
Right.
If you're more of a swing trader, more of a quicker trader, that's fine. But at this point, a lot of the trades are working. A lot of them are making progress, and so usually when you're early on in a rally, that's where you want to get a little bit more in the mindset of adding. Now, the one caveat here is, even though we had that follow-through day on October 14th, there wasn't much of a correction. It's not like we had a bear market that we were coming out of. This was really a very mild correction, barely 10% on the NASDAQ composite. So it's not like we were coming off of a major bottom here. So that is one consideration where, you might not be getting as aggressive, but a lot of times seasonally, we do see strong markets at the end of the year.
And what about the 21-day line for the NASDAQ? Looks like it's getting dangerously close to crossing back above the 50-day line. That seems notable.
That is. And so one of the things that we're going to be looking for in terms of, for people that watch the market school, one of our tricks of gauging the market strength, we will be looking for that 21 to not only get above the 50-day moving average line, but to stay above it for at least 5 days. And the fact that we are trending, the lows have been above the 50-day moving average line and the 21-day moving average line, both for a while now, that's another positive in the market's favor. And again, without much distribution behind the rally yet.
Yeah, and the Russell 2000, which the IWM ETF tracks, getting dangerously close to breaking out above a level it last saw in early September.
Yeah, and what I liked again here is that a lot of the indexes are participating, so you've got the small caps participating, you've got the big caps participating. It's not just tech, it's also materials, it's also energy, it's also the consumer discretionary. It's a lot of the different groups are acting in unison. And the fact is, the Russell 2000 was the laggard index for quite a while. As many of these indexes were making new highs, this was kind of going sideways, but it also wasn't losing much ground. It was really kind of maintaining itself above its 200-day moving average line. So at no point could you really say, oh, small caps are broken at this point. They were maybe a little bit out of favor, as the $1 trillion club members were getting a lot of attention, but they were by no means broken. And so you did get that support right around the 200-day moving average line multiple times.
Right. Okay, so it looks like we're all swimming in the right direction right now. And you mentioned the $1 trillion club. Nice segue there, Justin, to Tesla, which is now a part of the $1 trillion club for its market cap, not only crossing above that 900 price level on Friday, clearing that 1,000 level in a big way today with a gain of almost 13% by the end of the day. Some big volume behind this, Justin. We had earnings just a couple of days ago, and Tesla moving on news here today that Hertz is buying 100,000 Teslas for its fleet. So we have a Tesla at over $1,000, the market cap at $1 trillion, Hertz buying $100,000 Teslas. And I believe Tesla is up about 1,000% from the coronavirus crash lows. So if that's not a convergence of round numbers, I don't know what is.
Yeah, a lot of thousands, a lot of zeros behind a lot of these numbers. Again, Tesla. The one thing I will say is, for people that are saying, "Oh, is this breakout the time to get into Tesla?" I would say, look, this is getting extended. If you go to the weekly chart, and I'll tell you, I do own shares of Tesla myself. Where I picked them up was right around 730. And what was happening at that point is you had kind of that steeper move down. After the August peak, you had that kind of quick, steep move down, but then each low seemed like it was just getting tighter and tighter and tighter. And that's the action that I really like to see. And so that's why I made my purchase, right around there where you've got it marked, right around 730. And the issue now is we've got a lot of weeks up in a row at this point. Now, I could see where, look, if you had that 3 weeks tight, you see that blue shading, which it's not the normal 3 weeks tight because it was kind of moving up a little bit on those highs, but it was a 3 weeks tight there. That could have been another place to kind of sneak in, but even then it was starting to get a little extended. I would have much preferred an add there rather than initiating a position. But I kind of think that, at this point, and look, I was saying this last week, it just seemed a little extended to me last week. And sure, it's up another, 10%, which is great. But at some point, it will have to pause. And you just have to be careful buying extended because you don't want to get knocked out of a good stock because you just bought it at the wrong time.
Right. Well, at least for now, this is a breakout from last week. That is working. And we did talk about on IBD Live the potential for a quote unquote mental health buy today.
Right.
But even, in the first 20 minutes of trade, it was, it wasn't even at 1,000 yet. So it was around that, between 950 and 970.
Yeah. We were saying, it could get to 1,000 soon, not realizing it would just be later today.
Yeah, exactly. But you want to be careful of not just joining the bandwagon when there's all that hype. We've been keeping tabs on Tesla. It's an important stock in the market, and we've identified some proper entries along the way. So you just want to be careful there, as you said, Justin.
But to that end, there are other plays that are still looking good. That kind of, maybe it's not Tesla, but you've got a lot of the Chinese EV makers that are looking interesting, and then there's a whole slew of lithium plays, which brings us to Albemarle, which this is one of the largest global lithium miners. Now they do a lot of other things, so it's not a pure lithium play, but of course lithium is what a lot of these EV makers are using for their battery technology, and the demand is just surging as more and more EV makers are coming onto the market. More of these EVs are being produced. The batteries, it's all about those batteries and that battery technology, and lithium is one of those things that it needs. So Albemarle had a nice day today. What I like here is this is not something that's too extended, right? This is something that has actually formed a little bit of a consolidation here. It was coming down for a few days and then it popped today. So this is actually something that we put on Swing Trader earlier today. Now it does have earnings coming up, I think on November 3rd after the close, if I remember correctly. So that is something to be aware of, but you have some time here to get some cushion on this stock. And this has been one that has moved, quite a bit. It's able to move. So you think a lot of times chemicals, specialty, or steel stocks, or these cyclical stocks, how unexciting is that? But remember, these are the things that are kind of providing the parts for a lot of these exciting tech giants to succeed. And so Albemarle definitely has had some very strong moves in the past. And so we'll see if this is another base that is potentially setting up a foundation for another move in the future.
All right. And last but not least, checking in on CELH, up 6% today, above average volume behind this move. It almost closed. It looks like, I don't know if this is the exact final closing price at this point, but at that 100 mark after tightening up for a couple of days right around the 21-day.
Yeah, so I think that 100 mark is the mark to look at, and I'm showing a close of 99.96 as well. But what I really like here, again, what I'm finding a little bit more exciting is how many tighter patterns there are. So really what you had is kind of this back and forth action for a while. It was really kind of holding its 21-day moving average line for a while. And again, if you go to the weekly chart on this, just to kind of understand the character and the personality of a stock that you're interested in, this had a phenomenal move. Now, this is the calorie burning beverage, right? So certainly something that is getting a lot of attention. Some might argue that, hey, this has already had a strong move, and maybe that's all it's got. But when I look at things like this, if I see this tight area, a lot of times I will give it a shot. So it's one of those where the 10-week moving average line, that pause in the price allowed that moving average line to kind of catch up with the price. And it just doesn't seem like there's much risk here. You can very quickly back away from this trade if it starts undercutting into the 10-week moving average line or the lows of just a few days ago. So you're not risking too much with the potential, because again, this has shown that it can make some big moves. You've got the potential for some large rewards.
All right, so CELH, a setup here with above average volume behind the move, one of the key elements that we are focused on. So Justin, thank you so much for breaking all of that down for us today. We appreciate it. And make sure you tune into IBD Live tomorrow, where we will be joined by David Ryan. He is one of William J. O'Neill's proteges, a longtime portfolio manager at O'Neill, and also hedge fund manager and mutual fund manager. So a lot of decades of trading experience and CanSlim knowledge under his belt. So we look forward to welcoming him back to the show tomorrow. And then we have Mark Minervini, fellow market wizard and trading extraordinaire, joining us on the show Wednesday. So for all the details, go to investors.com/IBD Live. We will see you there tomorrow, everyone. Bye.